Hey, it's Clay Trader, and this will be a video chart on ticker symbol DCTH. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Did this analysis yesterday, so that's where this green line annotation is coming from. And, I don't want to beat that dead horse again, but if you want to trust me, great. Just understand and trust that 0.02 cents is a very, very important level of support. If you want more information on that, all you got to do is go back in the video archive and watch the video from June 5th. But just know that 2 cents, very, very important level of support from the quote-unquote storybook perspective. So on that note, yeah, the bulls are doing a good job from the big picture because, well, the price is still up above the 2 cent mark. In fact, today the price didn't even come close to testing the 2 cent mark. So from that perspective, things are still going just fine. Now, from the other side, though, the bears seem to be taking back over control. When you look just at the highs, you can clearly see that the highs have kept getting, shorter and shorter and shorter. And, just that they're not really, you could draw a trend line in there. So that instead of drawing an arrow down, why don't I just put in, a trend line that's illustrating the same thing. Now, just because there's a downtrending trend line, does that mean that the price is guaranteed to break down below 2 cents? I'm not saying that at all, but it's just something that definitely needs to be noted, along with the fact that volume has dropped off quite a bit. I mean, you can look at yesterday's volume. I mean, that was a great, great amount of volume. And then you fast forward to today, and volume has pretty much hit the wayside. Now, just because volume's dropped off again, you can't sit here and say that it's guaranteed to fall back below 2 cents. But, when you stop and think about it, well, volume is a measurement of interest. The more people that are interested in something, the more volume it's going to get. So with a big drop off in volume, people seem to have lost interest pretty quick. Now, could interest come back in? Yeah, absolutely. Interest could return in a flood tomorrow. But as things stand right now, and what the chart is telling us is that interest, for whatever reason, seems to be dropping off. And if interest continues to drop off, aka if volume continues to decrease, then it would not be shocking at all to see the price fall back below 2 cents, which is not what you want to see happen. So the bulls are hanging in there. There's no doubt about that. But if people are saying that they seem to be on thin ice, I would agree with that. But to be fair to the bulls, just because they're on thin ice does not mean that the ice is going to break. So bulls are on thin ice, but who knows? Maybe they have something up their sleeve. So we'll see what happens tomorrow. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.